and US stocks with M+ Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the Edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You are now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Seem to be having some technical difficulties. Hello. Okay. Hi everyone. Welcome back to our M Plus Global live stream. So today we are back again with another English session just for you. So how is everyone doing today? Personally, it was quite a long day for me, but it's fine because, I rested well over the long weekend. I don't know about you, but these last 2 weeks have flown by thanks to the public holidays, am I right? Well, anyways, thank you for joining us tonight. Hi, Lai Ming, I see you in the comments. I'm glad to be here today hosting this live stream for you. My name is Caitlin and I'm your M Plus Global anchor for tonight. Now, with the looming economic uncertainties, right? Most of the investors expect the Federal Reserve to raise interest rates in the upcoming Federal Open Market Committee, FOMC, meeting this week. Could this be the final rate hike this year? Well, other than that, Apple is expected to release their earnings results this week. What should we expect from Apple's earnings preview as well as the future prospects for the company? Lucky for all of you viewers, all these questions will be answered today as we will be joined by our Head of Research, Loui Low, who will be sharing his in-depth knowledge and real-time analysis during this exclusive live streaming event. Get the inside scoop on market trends, stock picks, and strategies for navigating the ever-changing landscape of the US stock market. Now, if you haven't had your dinner yet, go grab some food, get comfortable, and get ready for a definitely informative and interesting talk with Loui. Stay tuned, folks. We'll be back before you know it.
Okay, welcome back. Good evening, everyone. My name is Loui, and tonight we'll be sharing a little bit about the FOMC meeting, what sort of expectation that we have for the outlook of the Federal Reserve, what sort of actions that they will be doing, and also a little bit on the earnings preview for Apple. I think a lot of people will be understanding that, since last week, we have a lot of big tech giants has been announcing their results, and most of them has been beating the results. And even more than 75 to 80% of the S&P 500 companies that has been reporting results has beat the market expectations. So will Apple, beat expectation this coming week or this coming Thursday? That is very, very crucial. And if there is a case, what sort of instrument that we can actually take using our M Plus Global app. So I think that later on we'll share with you during the Q&A section. But before we go into that, this is just to give you some disclaimer about these slides. or the content that I'm sharing right now is to give you some reference. But if you want to buy into all this or trade into all these stocks, make sure you do your own research before getting into trading all the instruments that I've mentioned in this session. Okay, so yeah, so our agenda for today is to talk about what sort of expectation or what sort of sentiment that we can gather right now in the market. And especially all these global central banks are actually producing or they are into the meeting this week, and a lot of them will be deciding whether to increase or decrease the interest rate. Well, it is very exciting, during all these events of the interest rate decision or the central banks meeting, people will normally speculate ahead, when they know that Federal Reserve or whoever that is having another round of rate hike, normally they will trade some of the stocks beforehand. Okay, so this round is a bit weird because before the FOMC meeting, actually the S&P 500 and also Nasdaq has actually went up. So normally when going into a session of interest rate hike, normally people will be throwing the shares because interest rate hike, it doesn't bode well for technology stocks. Why do I say so? It's because if you are using the idea of interest rate means when you borrow money, if you need to pay higher interest, that is not good for most of the tech companies because tech companies borrow a lot and they leverage a lot, and they use leverage to generate more business or more earnings. So that is why when interest rate is up, normally it's bad for the general whole sentiment, stock market sentiment, and generally it is a downtrend or pullback formation ahead of the FOMC meeting. But this round, it is quite different in a way that before the FOMC meeting, over the past few trading days, we have been seeing some of the trading movements of S&P 500, even the Nasdaq is actually going up. So wonder what is the direction the market is taking, or I wonder what is the market speculating that, what is the tone for Federal Reserve going forward. So that is a very important thing. So if you think that this round will be the final round of the interest rate up cycle for the FOMC or the Federal Reserve, maybe you can comment in the section. Or if you think that they might continue with more rate hikes going forward after May, also please comment. If you think that they are going to do a rate cut this year, you can also comment on that. So perhaps you can put in your thoughts into the comment section. Yeah. So later stage, we are going to talk about GDP, CPI, PCE, and we'll talk about the FOMC preview to see what sort of indicators can we really gather, what sort of consensus are we looking at. Okay. So this week itself, you can see in my slides, we have all these Federal Reserve, Brazil, ECB, Czech Republic, Malaysia, Australia is actually producing their central banks meeting. And Tuesday we have Australia, Wednesday we have Federal Reserve, Brazil, Malaysia, and Thursday we have ECB, which is very, very important key indicator for us to understand what sort of direction we have overall in the stock market, first of all, because if the decision is that they are going to be more hawkish or stay hawkish at least for the near term, then perhaps it should be not so well for the stock market. But if they are going less hawkish or more towards the dovish side, perhaps we might have a potential run. So what does it mean by more hawkish or more dovish? So let me give you in a more layman term is that if Federal Reserve or central bankers are going more hawkish, which means that they are going to be increasing rates higher and higher, or they tighten. Yeah, tighten means they reduce the liquidity in the market or the economic system, and therefore lesser liquidity in the market, which means that it might not bode well for the stock market as well. So Think about you are in a pool of water, swimming pool with full water. But when the water is declining, do you think that you will have fun in the pool? It's the same thing, right? It's the same thing here, whereby if there are more money, more liquidity in the stock market, that is a good thing. Like for instance, during the past 10 years before COVID, you can see that the stock has been rising until COVID. Helicopter money in, and you can see that the stocks market went up berserk. Okay, so that is the whole idea about quantitative easing, more dovish tone. But since then, we have been seeing the Federal Reserve, tightening the credit and also increasing the rates, and therefore it is sort of like reducing the appetite for stock market. So in a way, the pool of money is getting lesser and lesser, and therefore people might not be so enticing to put in their money into stock market, and therefore the market has been going down in over the past years, over the past few quarters at least. So that is why central bank meetings are always very important to watch out. And if you notice throughout the previous few rounds of the sessions, generally speaking, people will think that when FOMC meeting is nearby, people will be more cautious, people will be selling off their shares bit by a bit, reducing their exposure, because they think when it is increasing the rates, it is increasing the borrowing costs for the companies, and therefore it should reduce the earnings for most of the corporates. And that is why when you think you need to repay more of the borrowing or the debt, then it might be not so enticing for the earnings going forward. So that is the whole idea here. And this year itself, it is the whole new level of things, because over the past years, they are in the ZRIP, zero interest rate policy. So if you think about all these years, you need not to pay a lot to repay your debt, because it is near to 0.25%. But right now, suddenly you need to pay 4 to 5% in terms of your rates or of your repayment of your borrowings. So what does that mean? So this year is a full-blown impact of all this happening over the past years. So increasing the rates, which means that they need to pay more and earnings might be lower. So that is why all these analysts are actually imputing all these factors into their earnings, and let's see what sort of earnings season or earnings reporting season that we are into right now. So I think just as I mentioned, over the past few weeks, a lot of companies has been reporting. So among S&P 500, about more than I think 20 to 30% of the stocks has been reported release their earnings result, and more than 80% of them are beating the expectations. So that is the whole idea here. So during this round of interest rate upcycle, analysts could have already priced in their borrowing costs and therefore lowering down their earnings expectation. So right now, if they can beat the earnings or beat the consensus, does it mean is it a good company that you can look for? Because if you can beat during normal times, yes, that is for sure is good. But if the company's earnings are declining, and analysts has to reduce much more further on their expectation of earnings, if the company can beat the current earnings, which means that it is nothing to shout, because analysts has been lowering down their expectation for the company to release the results and beating the earnings. So what I'm trying to say saying here is that because analysts has already imputed all these negative catalysts and make sure that they are lowering down, they are being conservative in their earnings expectation. So by beating this earnings expectation doesn't mean anything. So another factor that I want to make sure that I will follow through on filtering on stocks is if they beat is one criteria. If they beat the earnings expectation is one criteria, but if they can actually beat their own last quarterly results earnings, that is even better. What it means here is that they are improving in terms of their quarterly earnings. At the same time, they are also beating the expectation. So that is the two criteria that I think it is important for a company to show that they are capable of making good money, not only making money, but making good money during this kind of environment. So the full-blown effect of the interest rate upcycle could be still, they are still digesting, still normalizing throughout this period of time, because the interest rate just started, or during last year, the whole course of upcycle started since last year. So in a way, this year is very, very important and very crucial for us to determine whether the company is able to make money or make very good money. Okay, that is a very, very important factor to take note. And another factor that is going to be affecting their earnings will be the strong US dollar. Like we have mentioned several rounds in our previous webinars or live stream, we mentioned about if the currency is very strong and these corporates are making business or producing their revenue out of the country of United States. So which means that they need to translate all their earnings back to their own statement. It might reduce the revenue, it might reduce the earnings. So similarly, like giving you an example is that if you're looking at Malaysia, if ringgit weakens, it's actually helping the exporters, right? Helping exporters such as furniture companies and also glove companies. Why is it so? Is because if you think about when you have to sell your product outside, if the counterpart's currency is stronger, they can buy more items, more units of your products. Okay? So if your currency is weak, that is helping the exports of your products. Okay? But if your currency is strong, people or the counterparts are unable to buy as many products or as many units of your products. Therefore, it will lower down. That is the general idea about the currency. When your currency is stronger, therefore translating back to your revenue or even earnings will be slightly lesser. So that is a general view, general rule of thumb for US dollar currency. So this year itself, you have the strong US dollar plus the interest rate hike environment. So the earnings that will be coming out in the first quarter or even the second quarter is very crucial to see whether has the earnings normalized and has the earnings grow throughout this period of time. So these are the few things that I will be watching, and this first quarterly result is very important and very crucial for us to determine whether all these technology companies has decent demand in terms of their products, such as today we are going to talk about Apple. What about Apple? Apple is coming out with results this Thursday, but what sort of anticipation that we can gather throughout the past January until March quarterly results? So that is very important for us to understand. So coming back, okay, I mean I've been sidetracked too much onto the earnings part, but coming back to central bank decision, it is everything has I'm linking back to why interest rate hike will reduce the earnings potentially for corporates, and how corporates' earnings beating the expectation or unable to beat the expectation will contribute to the stock market direction. So that is one by one. Okay, so central banks' decision will definitely affect the earnings, therefore affecting the stock market. So that is the general rule of thumb of things. But currently we are talking about that this might be the last round of hike for the U.S. Federal Reserve, and what sort of anticipation you might be having throughout the next couple of months, because there are still 3 more rounds or 4 more rounds of interest rate decision making meetings. So we need to understand that as well from a consensus perspective, from analyst perspective, and also from investors perspective. What should you do if you're under this kind of scenario? But given this this duration of period of time, traders are likely to believe that the whole up cycle has been coming to the end. And what is the next course of action? It may be having a pause, which means that they will not increase the rate, but they might not reduce as well. So that is the first scenario, whereby right now they have been increasing from 0.25 to near to 5%. So they will hang on there, and they will put a pause towards the rest of the year. Or second scenario is that if they already have the upcycle and they are going to reduce the interest rate. So the scenario one is going to be taking a pause and remain flat for the rest of the year for the interest rate. Second scenario is that to reduce, the rate cut comes in throughout the next half of the year. So what do you think about this? Is it the scenario one or is it scenario two? So let's think about what sort of indicator that generally the Federal Reserve will be using to determine that sort of actions. Okay, so we must back our view using several data. So a few key points that people will be using, or Federal Reserve will be using. One of it will be how is the market doing? How is the economy doing? So by understanding the economic activity growth rate, that will give us an idea of whether Federal Reserve will be increasing or decreasing. So that is the whole intention of the US GDP versus the interest rate hike direction. So this is the first piece of puzzle that we need to solve. So in order to understand whether they are going to increase or decrease, perhaps you can look into the GDP data as well, because if we are in a very good economy has been growing well, normally they would increase the rate in that in that duration of time. But if the Federal Reserve is thinking that, hey, the economic activity seems like slowing down, shall we make a more dovish tone? Shall we put some easing towards all this tightening of credit and provide more liquidity towards spending, boosting the spending and things like that. So during recession, what do they do is that they try to give out more liquidity and they try to reduce the rates so that people would be able to spend. Yeah. So that is the whole idea here. But at this current juncture, what do you think about this GDP? Because GDP has been increasing, from 2% rate, and right now the latest quarterly GDP, US GDP is on Q, it has just grown by 1.1%. Okay, so at least they are not into the recessionary period. Recessionary period means that in our last webinar, we did talk about when we have a 2 quarterly consecutive quarter of negative growth, or contractionary of 2 quarterly consecutive quarters, which means that that is considered as a recession, or technical recession, you call it. Okay, so in that manner, FOMC or the Federal Reserve may need to continue to ease, continue to reduce rate cut, and to provide more, to spur more spending in a stock market. So that is the whole idea here. But since that it is just slightly above the 0% or 1.1% Q-on-Q growth in terms of the first quarter GDP, so that is sort of a good sign that at least we are not. The US is not going into a contractionary phase. So which means that maybe they will not rate cut, but they also will not continue to increase the rates too much. Why is it so? It's because if we are seeing the previous few years or over the past, since 2016 until 2023, the overall GDP growth has been above 1.5 to 2.8%. Okay, that was general view of the GDP growth. So currently, it is actually below that range. It is near towards 1% year-on-year growth in terms of that number. So any margin of error, so which means that any contractionary period in the next upcoming few quarters, that will contribute to a negative growth in terms of the yearly GDP. So which means that right now, if we are thinking about is the US growing? I would say that it is growing, but it is not growing at a very decent rate. And that is why I think to increase further, it might not be the case. To decrease further, it is not recessionary period. So I think it will stay put based on this first puzzle. Okay, so this is the first idea here. So, but traders actually wants a rate cut. So which means that GDP data has to go into a recessionary period in order for Federal Reserve to react on a rate cut. So in my view, I think after this rate cycle, up cycle of 25 basis point in this May FOMC meeting, perhaps we might be looking into a rate pause, which means that it will stay flat for the rest of the year until we see a recessionary phase or until we see a contractionary period in at least 2 quarters of GDP. Okay, so that means right now we are still quite safe, or I would say it is neutral already since the last upcycle, since all the upcycle since the past year. We are at a neutral point whereby it may stay flat, but my view is that it will not go for a rate cut at least for the rest of the year. Okay, so this is the first piece of puzzle that gives us the understanding about what sort of expectation from this GDP. Okay, secondly, looking at CPI data. CPI data has been going up, surging towards 9.1% during this part of the day. It has been declining since then. Okay, so this is a good sign whereby it is declining, and CPI is an inflationary indicator that tells you that whether you're buying your things at a more expensive rate or is it at a more cheaper rate, especially on the food and also energy prices. So why does it relate to you? Is because when CPI goes up, it is telling you that you're paying a lot more as compared to last time for food or energy prices. So perhaps in the US, the fluctuation of the oil price affected them so much that during the past, I think 5 to 7 quarters, they are in a very energy crisis, sort of energy crisis, because when they go and pump petrol, it is affecting them in their lives. So right now, since that it is on a declining mode, they need not to increase that much to battle, because one of the function of the Federal Reserve when they increase the rate is to battle, to tackle the consumer price index or to tackle the inflationary pressure that people are facing. So if the declining trend is in for the CPI year-on-year basis, that means it is already decent, or we can say that the Federal Reserve has used the tool well enough to battle the inflationary pressure and make the inflation lower as compared to last few months. Okay, so it is declining, which means that the Federal Reserve tool has come to effect. Okay, and another view to that, because we understand that Federal Reserve always talk about the inflationary pressure, what sort of expectation that they are looking at. So CPI numbers should go to 2% year on year, and if you're looking at the month-on-month growth rate or month-on-month increase or the quantum of the month-on-month CPI numbers, they are actually coming back to the normal range of increase in terms of what you are paying right now. So for instance, over the past 50 years, let's say since 1970, it is near towards this range, right? 0.5%. It has spiked up, yes, definitely. But what we are trying to say is that during the normal range of time, they are always looking at around 0 to 0.5%. Yeah, you can see that over the range of time of 50 years, not many spike up or spike down, unless during this period, if it is spiking too much downwards, it's also not good, because it can mean a recessionary phase like during 2008, during COVID 2020 times. Yeah, so these are the times that whereby if CPI numbers are coming off too much into a negative territory, it might not be good as well. But as long as they are in the normal average range of 0 to 0.5, then I think it is good enough that we can understand that CPI year-on-year figures will likely to go down even further through time. And time is the best medicine for now, because we can just wait for the next few months to let the CPI numbers decline. We cannot do any more things, because the Federal Reserve has used the tool of increasing the rates to battle the CPI, which is the inflationary pressure, and right now it has come to effect and it has been going down. So another indicator that the Federal Reserve has been using is the PCE, personal consumption and expenditure, and that is also on the declining trend. It's also a way to decide whether the inflationary pressure is up or down, and therefore, since that the CPI numbers are down, PCE are down, so it's likely to go back to normal, but we just need some time to go back to normal. And if you look into the range of PCE based on my understanding of over the past 50 years, this is likely to be in the range of 0 to 0.3 or 0.25 range, which is currently right now at about 0.1 to 0.3%. So which means that PCE has been coming back to a month-on-month view that is within the average normal range. So which means that we just need some time to pass by and to see whether this PCE will come down further towards about maybe 1 to 2% going forward. So I guess right now, even the CPI numbers is already showing signs that it's on declining trend. So therefore, we need not to worry too much because the interest rate upcycle tool has used very well that the inflationary pressure has been coming down. So if they are on track and Federal Reserve need not to do further in hawkish tone to all this event. Okay, so but again, this should be the last round of the whole upcycle, and it could be at a tipping point, but it may not have down cycle yet. Okay, it might not have down cycle. Why is it so? Is because it is a data-driven thing. So if the recession is not in, or the US GDP is still growing at least at above 0% rate, then we shouldn't be too afraid about all this rate cycle going forward. As long as they are still growing, it might not continue with the rate cut going forward. So for this year itself, at least my view is that it should stay flat for the interest rate. So let's understand since October what has happened. What was the consensus thinking about during that particular period for the interest rate cycle? Okay, so during October view, the consensus is looking at a range of peaking during this range of dates, which is in the May and also June, to say that after the March FOMC meeting, they should be going into a rate cut or a slight decline in terms of rate, and therefore this is the consensus view during the time. So which means that it should peak around March to June, and therefore they wouldn't increase further on that. So that was during October, and right now we are in April. So again, another view to that is that we have Federal Reserve rate forecast on in the December view. They are also looking at the expectation that in May and also June, that will be the timeline for the peaking of the interest rate. And in April last week, that was before the GDP. It is also having the same view to say that that should be the peak of the interest rate, which is around 5.02, 5.06. So which means that consensus has been in line to say that the peak will be around March to June, and it has happened right now. And perhaps later on in this FOMC meeting, we will understand further what sort of tone they are putting out as a statement to the market to decipher what sort of actions that they are going to do. Either they are staying hawkish, or staying neutral, or staying dovish. Okay, so that sort of actions that they are, these are the three actions that they might be using as a tool to guide the investors. Okay, so after the US GDP, that since that Federal Reserve has been, since that the GDP has not been coming out last week before our webinar, and after the US GDP has came out, what sort of increase or decrease of consensus is looking at here? So it is about 5.067 and 5.15. It is slightly higher than the 1 week ago, which means that they are still quite confirmed that they are going to have a rate hike at least for May, and then perhaps until after June or after this FOMC meeting, we will sort of understand the direction in the near term, what sort of direction that FOMC, the Federal Reserve, will use is either the scenario 1 or 2. Okay, it's either flat or coming down. I think to go up higher, I think they need not to do that because we can already see the inflationary pressure has been coming off over the past few months on CPI and also PCE, and at least we are not having very strong growth in GDP, so that there is no need for them to increase the rate during this very the growth rate of US GDP is not as huge or as decent as what they want, so they might not continue to increase. So in that concludes if that the two things, the two puzzles, one is the GDP, one is the CPI. So if these two things coupled together, we can see that most likely the FOMC meeting will be having one more increase in terms of the rate hike, and then after that interest rate. After that, we might be having maybe a neutral tone for the rest of the year because we still think that the US GDP can still continue to grow at this current point of time, and therefore it will be neutral and stay on a rate pause at least for the rest of the months or the meetings throughout 2023 before, if when the US GDP is going down further, then perhaps during the time they can call for a rate cut. But for the time being, I still think that we are not really going into a recessionary period, and it needs not to continue to hike further or reduce the rate for now. Okay, so that concludes the FOMC side of things. But we also want to bring you some highlights of what is happening in some of the earnings report on Thursday, because if we are looking at all the FANG stocks, so-called FANG stocks like Meta, Amazon, Microsoft, and also Google, they have been announcing the results. Just that Apple has been not ready to announce yet. So this Thursday will be them announcing some results. So I just want to give you some highlights about what is Apple, what sort of anticipation that we can look for in this quarter for Apple related earnings. And perhaps we also can understand that, first of all, we need to understand that what sort of revenue or business that they are into right now. Okay, so in fourth quarter, FY22, the big chunk comes from iPhone, MacBook, iPad, which is, these are some of the hardware products that they have been selling, and these are some of the major parts of it. So you can see that from iPhone, all these are actually contributing about maybe 40, 60, 80, yes, about 60 billion. Okay, 71 billion. And if you look into another segment of their revenue segmentation, is about services. So these services has been growing as well. So basically, throughout time, we can see that the stickiness of Apple products has been very successful, and therefore, since iPhone products, MacBook, all these are actually contributing to recurring of buying or demand there. So basically, last quarter itself, you also can see that it is still growing. So perhaps if you're looking into consumer electronic products that is very stable and very sticky, I think Apple ecosystem is one of the very sticky. The products are very sticky. So therefore, a lot of Apple fans will continue to buy onto their products because it's user friendly and things like that. So I think Apple has that kind of. Last time used to have that wow factor. As long as you own Apple, people will say, wow, you're like a very, very savvy person, in all this. And right now, it has been so common. Everyone has, at least own one of the Apple product, like iPhone or even notebook, MacBook. Yeah. So I think in this kind of scenario, I believe that the stickiness will continue to grow and will continue to be there, and their revenue will continue to be growing. Although it might be not as fast as the previous few years, but at least this will continue to see a strong stickiness product continue to have demand, and therefore overall I still am quite for sure that they are going to be on a good recovering tone or at least after the COVID, people have been buying lesser and lesser products because of all this lockdown and things like that. But going forward, what I believe is that this product will continue to be there, and the recurring income from product side and also services side will continue to grow. You can see that there's clouds, there are Apple TV, App Store. All these are actually contributing factor to all of their revenue. And bear in mind, there is a very, very good stats to say that because of their App Store is so good that you need to list your product there, and also you list your product on App Store. Whatever you list there, whatever you are being charged, a percentage will go to Apple. So that is how they make money from the App Store. And App Store is very good in terms of all these security issues. So sometimes, most of the times, you will say that when you are buying to Apple products, normally you are looking for high security mobile gadgets to make sure that, to ensure that you are always safe from all these scams or all this security. But sometimes when you click onto unknown links, that you also can get into scam as well. So I think Apple App Store product has that kind of security feature, because you need to go through a lot of multiple tests before you can list your apps onto the App Store. So that's why I think it's very interesting that they have that, and whatever you are being charged, everything, some of the portion will go to Apple's revenue. So that's how they make money. So I guess that is the idea here. And basically, you can see that they have very good net profit and also has been growing in terms of their revenue. So basically, they are in a very good niche that even products are selling during the COVID times or after the COVID pandemic era, it is still selling. At least that is one good feel-good factor. And secondly is that services under them, like iCloud, you also, once you hit certain limit in terms of your storage, you will need more storage, you'll buy iCloud. So it's the same as all other products such as Google. You need to buy all these products as well, and all these will contribute to their revenue. Okay, so when you buy iPhone, maybe you also buy iCloud products or get more storage and things like that. So it is same across, like Microsoft also sell their cloud services, Google also sell their cloud services. But again, if you're sticking to all these products under Apple, most likely you will also get into iCloud. Okay. So just to give you an idea of what sort of expectation, what sort of new products has been coming out during this January to April, and to give you some ideas and some colors of what sort of anticipation that you can actually look for in the upcoming results, on Thursday. So in January to April, so I think these are some of the products that has been launched. 14-inch, 16-inch MacBook Pro, M2 Pro, and I heard M2 Pro and M2, all these chips under Apple is very efficient, and is very, very good for content maker, and this is actually helping, the content industry to become a better way to, build their own content. So again, M2 and M1 is actually a very, very efficient chip, or very efficient for content maker to produce their videos or whatever it is. For creative content creator, I think that is where MacBook or Apple products serves. And Mac Mini is also being launched. HomePod second generation. This is like a speaker, a smart speaker, and they can connect to Siri and things like that. And I think if you are into smart home, even you can use this HomePod to attribute your smart automation system at your place. So going into all these phases of smart automation, smart home kind of devices, I think Apple has one of the best automation products, or to build your, or what I can say here is that to build your smart home automation devices, I think Apple has a very good ecosystem to do that. Okay, so you can use HomePod, you can use Apple iPad and things like that. Okay, iPhone 14, iPhone 14 Plus also being launched, and this Black Unity Sport Loop is the iWatch. Okay, so comments from the CFO in the recent quarter, and we can understand that they are not really providing a revenue guidance, because I think it has been a very challenging time for them, and they are just sharing some directional insights that based on all these macroeconomic factor that we have seen a lot of lockdowns being uplifted. That is a good sign. COVID-related impacts to our business do not worsen, which means we are out of all this COVID pandemic era, right? And even China is already reopening up their borders. So these kind of events are happening in the world, and therefore it shouldn't dampen their business too much. And year-on-year wise, I think for March quarter, they are expecting it to be similar to December quarter. So if you are looking at similar quarter like December, this sort of revenue that we are going to be hunting for, okay? So revenue will be about 90-ish. So currently the consensus is looking at 92 billion. So if they can actually beat this revenue and also beat the earnings of 20.7 billion, I think that will be a very good sign of further recovery in terms of the share price, okay? Share price going forward. And if you couple with the idea of FOMC meeting is already at the final stage of the interest rate upcycle, that could be another good point whereby the bull market can be also coming in after this FOMC meeting, okay? So another few things that I have to mention is that the prospects going forward. So I saw some of the comments talking about Apple also has a savings account now which pays an attractive interest rate of 4.15%. Yes, that is another very good point, which is under the prospects segment. This is actually gathered a lot attention, because throughout this period of time, some of the banks are still providing 0 to 1 to 2%, and if you are very attractive in terms of your interest rate, that could actually help. They might be a very good big digital bank, if people are pulling out their money and to put under this Apple savings plan. That could be one of the areas that they can have a lot of cash flow out of this situation. Yeah. So Apple has yet to announce open its first retail store in India. So that is also another good sign, because after China, India could be another very wide and large population that we are in right now. So if they are opening their first retail store in India, that could be another wow or feel good factor that the revenue will go even further going forward. I'm pretty sure that India population is not as not small, and therefore the growth impetus is there for them. Okay, so some potential lineups that we want to talk about is that in June this year, they will be having this worldwide developers conference. Normally, they will just update their iOS and things like that. But it may also contribute to some of the launches, like for instance, the AR/VR headset. Okay, so the expected price will be about 3,000. This is just concept. Yeah, concept is not the real one. You will have a 4K micro OLED display and things like that. So this might be another gadget that people will buy, and this could be contributing to some of their products things going forward, products revenue going forward. So I think this is very important. WWDC, the Worldwide Developers Conference, is also to set something, to set what sort of products they might be coming out in the second, third, or even fourth quarter. So another lineup that they might be looking at will be the iPhone 15 and also iPhone 15 Pro. Normally, they refreshes their products during the September, and this could actually provide some another impetus for them that they want to buy new phones after they might have bought in a few years back on iPhone 12. Then this could be a good refreshing time for them to buy into new iPhones and things like that. So again, all these are using their own chips, and perhaps this could be also a new feature, that faster kind of things that they will always comment during their iPhone, their launching of their products. So I mean, they are quite similar for their products, but because of the stickiness of you can't really move out from the ecosystem, that is where they stand out. Okay, so that is what I think it is a very strong good or strong catalyst to buy into Apple Apple stocks. So late 2023, they are expecting Mac Pro with M2 Ultra chip, and this could be also another product that people will buy into. This might contribute to servers and things like that. So again, these are more towards high-end users. They might not contribute that much, but at least if they have all these lineups for people to buy into, I think that should contribute to their revenue growth going forward. Okay, so I guess that sums up my session. Stay tuned. If you have any questions for me, do drop them in the comment section. We'll write back after this for more.
How to buy Hong Kong and US stocks with M+ Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You are now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years. and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M+ Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M+ Global today and take control of all your global investments right at your fingertips.
To see more videos from M+ Global, subscribe to our YouTube channel today.
M+ Global, winning the world.
Hi, we're back after our short little break.
Yep.
Sorry, daydreaming into space there. Okay, now we're just gonna do a little quick Q&A session with Loui.
Yep.
So if you have any questions that you want to ask him, just drop it into the chat and we'll be addressing it as we go along. For now, I will be entertaining with some questions of my own. Okay, so if the Fed stops increasing interest rates, do you expect a bull market scenario in what's this?
Oh yeah. Do I think we'll have a bull market scenario in the next half of the year? Perhaps one way you can think about is during the zero interest rate policy that we have been very comfortable in.
Right.
In let's say over the past 10 years before COVID. Yeah. So during that time, people will use their money to buy into equities and buy into stocks, and therefore the market runs up. And also during the time, you have to remember that there is quantitative easing, which means that Federal Reserve is allowed to print money.
Okay.
That will allow more liquidity, and when there is more liquidity, like I said earlier on, it's like a pool of water. If there are more water, it is more happening in the water area and things like that. So in the same scenario that we are in right now, during that particular point of time, if more liquidity means people are happy and they are going to put more money into the stock market, therefore market is going up. But right now, the different scenario is we have been so comfortable in 0%. And right now we are at 5% after the interest rate hike.
Yeah.
So they need to repay they need to repay higher borrowing costs. So that sort of like will cap the upside potential. And secondly is that throughout that period of past 10 years, they have been printing more money. So it has been helping the upside of things. But right now, if they are increasing the rate, even they stop increasing the rate, we still have the quantitative tightening coming in. So which means that they are now reducing the buybacks of bonds. So which means that in layman terms is they are reducing the water in the pool.
Okay.
So they are reducing the money liquidity in the economic system, the financial system. And therefore, it is sort of like if there is a run-up, it may not be so exciting as before. So last time it may go up from 10K to 20K easily, but right now if they want to go up from 10K maybe to 12 or even 13K or 14K, it's like the max of it because it is still under the quantitative tightening environment, which means that the liquidity is so it's drying up in that scenario is Not as much as before. So right now it's drying up a little bit.
The Federal Reserve is the one that prints money.
Yep.
How often do they print money?
I
Are they
mean-
allowed to print whenever they want?
Yeah, they are allowed to print whenever they want. So if they, like for instance, during the COVID times, they have been printing money. So they say that, everyone is suffering, so let's print more money for them and they can spend on whatever things they want. They want to boost the economy because economy is so bad at time and they want to help out the masses. So that's why a lot of helicopter money has been, dropping to them straight away. So why do they call it helicopter money? Is that last time they used to not really go straight away to the masses, but right now it's straight away to the pocket of the citizens. So during that time, a lot of people punt stocks. So during the time, the bull market happens, and during 2020 COVID times, people thought that it is a recessionary period, but because of all this liquidity, it made a euphoria in the stock market.
Ooh, okay. Now this bull market thing, I don't quite understand it. Can you just explain it in layman's terms for me?
Bull market?
Yeah, I don't know what it is.
Okay, bull market is when people are happy, they call it, and the trend is going up, it's called bull market.
So just when people are happy.
No, and also other factors, like because of all this liquidity that has been coming in, it turns into a favorable situation because they can't. Okay, assume that during the time everything is closed down, even Genting is closed down, and you can't go and gamble. So people will use the money to get some returns from somewhere, So they would put some money into maybe equities during the time, the only place that is open for gambling or speculating,
Technically the stock market.
yeah, it's technically stock market. So there's no other ways, not really a lot of manner for you to actually make money. So that's why during the time and during that period of time, it is when a lot of money has been printed and a lot of money has been given out to the masses. And therefore, people use that money and trade stocks. And especially during the time, stockbrokers are very, very good in terms of business. And in US, there is something called fractional shares.
Okay.
You need not to own one share, but you can own less than one share.
Less than a share.
0.5, 0.25 of a share.
Okay.
So which means that it's more affordable for you to buy Apple stocks.
Yeah.
Like for instance, right now you are paying maybe 160, 170 for US dollar for a stock, but you can buy maybe a fraction of shares. So you can just pay maybe 10 US dollar, 20 US dollars to buy fractional shares. And that is why it allow people to enjoy the ride because it is easy to. The entry barrier is very easy.
So
and
that's a bull market.
Yeah, so everyone, making money so easy, then everyone would straight away go into the market during the period of time, and that's called a bull market.
I see. Okay, now I understand.
Yep.
Okay, next question.
Yeah, sure.
The US market has been supported by positive earnings released from tech giants and banks. However, JP Morgan recently took over First Republic after it was seized by regulators, which signifies that the banking crisis may not be over yet. So what is your take on the impact of the banking crisis?
Okay, so on the banking crisis, I believe that throughout this period of crisis, one statement has been very clear to say that the depositors are secured, but not the shareholders. What does it mean is that so when you buy into a company, you are called a shareholders.
Yeah.
When you deposit money into a bank, you are depositors.
Yeah.
So in this scenario of whatever bank run it is, or whatever crisis that the US is having, depositors' money will be secured. Okay. But not the shareholders' money. So which means that when you invest in the shareholders, when JP Morgan is taking over First Republic Bank, shareholders' money, shareholders, the person that has been buying the First Republic Bank may not get back whatever they have. Because
they already invested into it?
Yeah, they invested in the First Republic, but JP Morgan can take over straight away at a very low price or whatever price that JP Morgan is offering. So the shareholders' money might not be secured because you might be entering at maybe $10, but if JP Morgan wants to take over at $1, you are also
you're at a loss.
Yeah, you're at a loss. So in that sense, I'm thinking that the banking crisis may not have ended yet because it is just short-term of the things that's happening that has been developing recently. And one thing that we are not sure is that how many regional banks are there that has this kind of issue, so which means that the asset liability is mismatched. So for instance, what is asset liability mismatch means when you put money in, when you want to take money out, the banks cannot let you take the money out because they don't have very liquid asset to give it back. That is an asset liability mismatch. So it happens in First Republic, it happens in Signature Bank, it happens in Silicon Valley Bank as well. So they put in money, but because the banks buy into several non-liquid assets, they cannot liquidate it fast enough
to give back the money.
Yeah, give back the money to depositors. So that's why this kind of situation is called asset liabilities mismatch. So we're unsure that how many other banks are there having this kind of risk. The first thing. Second thing is that I saw some of these companies are actually tanking. Tanking means declining in terms of share price, and people are selling off some of the smaller banks to because they're unsure whether these banks have this kind of risk or not. So some of the banks out there are actually selling off. I mean, some of the banks are being sold off by the investors, even after all this happening, all of these developments, which means that even when the FDIC, which means that it's like our PIDM. Do you know PIDM? PIDM is like when you put in money in, you are being secured the 250K insurance. Means if the bank collapses, you still get back 250K. So that is the insurance, insurance body for the banks. So
that's here in Malaysia.
Yeah, that's here in Malaysia. So in the US, also having the same kind of body as well. It's called FDIC, if I'm not mistaken. So FDIC said that all the depositors' money will be safe, and even they have come up with this kind of statements. Over the past 2 days, we have been seeing some of the banks being sold down because the investors might not be might have seen some of their asset liabilities mismatch in this bank, and therefore we are not too sure how many other banks are there. But for sure, like we in Malaysia, we have Maybank, right? It's a very promising bank. So in the US, they have also like JP Morgan, all these very big banks. So what I'm thinking here is that there could be a two-tier kind of banks that will be impacted. The smaller ones, like the regional banks, very small, they might not be able to survive, or they might be having this kind of risk. Yeah, I'm not saying that they will have.
But they might.
Yeah, they might, because like even all these Signature or Silicon Valley Bank, they are having very, very good history over the years. But even they are quite big, they still run into this kind of situation. So what I mean here is that for big banks like those JP Morgan, all those, maybe they are more survivable in this scenario. The smaller ones maybe were affected by all these incidents. So I'm guessing here that the crisis might not be over, but I think that the downside risks for big banks are quite limited for the time being. Yeah.
So like if these smaller banks, they are more affected, what happens to them?
What happens to them?
Yeah.
I mean, the share
Do
price.
they just close?
It depends on whether is there a bank run, like for instance, like Silicon Valley Bank. It is a bank run, means that it is they are not able to pay back. I mean, they are not able to give back the depositors' money. And therefore, when a lot of people wants the money back, they cannot give. Then that is called that they have to close down. So someone will take over them, or they have to close down, and the PIDM in US will actually pay back the money to the depositors. So depositors shouldn't be worried about this situation. Actually, this banking crisis is more like a confidence issue. So if no one is fearful about their money being in the banks, no one will take their cash out, right?
Yeah.
So it's like a confidence issue. If everyone is believing that this bank is still well run, and no one's go and withdraw their money, shouldn't have this issue. So it's like a confidence issue. So
I see.
it's like, hey, Caitlin, the bank is going to collapse. You better take your money out right now. So it's like fear mongering that
Yeah.
one goes to two.
It's
two
like
goes
a
to
domino
four.
effect.
Yes, yes. So all this is actually a confidence. So I believe that they might still have one or two banks that are having this kind of crisis, but I don't see that it is
spreading.
It's spreading out to the big banks right now.
Okay.
So I think big banks are quite safe in the US context. So if you really want to buy into financial related counters, I think first of all you have to check what sort of asset, what sort of liabilities they have, and whether is there any mismatch. Although it's quite tough for retailers to actually find out what sort of asset they have, but again, do your own research before buy into all these financial companies. Yeah.
Do we have it here?
No, I mean at least what happens in the US is actually this Silicon Valley Bank is actually very related to this crypto related and also these startups.
Right.
Okay, so they lend a lot to the startups or lend a lot to these crypto related startups, and they need not to go through a lot of very stringent rules before they get their money. So that's why during that kind of process, a lot of risk has been being flagged, but not many people can pick up. Even I myself also maybe not able to pick up that kind of idea. But again, a very good thing is that in Malaysia we don't have that kind of they don't borrow out to this kind of lenders. They don't lend out to these borrowers. So which means that the banks here are mainly into maybe household debt or maybe a car, house, whatever it is quite safe that they can recoup back their asset in a way. So banks in Malaysia, I think, is quite safe to say that. But again, sentiment being sentiment. So when people are selling off banks in US, they also may sell off shares in our banking in segment as well. Yeah.
Okay.
Yeah. Sentiment and also their financial capability is totally two different things. Yeah.
Okay.
Yep.
Let's take a look at the questions in the chat. So we have a question from Loui Low. Janet Yellen says that US may default on its upcoming debt. I think this news will supersede the FOMC. What do you think, Loui?
I think for this part, we have understand that the debt ceiling is going to be higher and higher. As I read about the news on debt ceiling. So debt ceiling is whereby you can already stomach until here, but you still want to borrow more. So you increase your debt ceiling so that you are safe in a way. So debt ceiling in this scenario, if they are able, because you need both parties to approve. In like us, we have parliament, right?
Right.
So in the US, they have House, right?
Yes.
So so in that meeting themselves, if both parties are okay to improve the debt ceiling higher, which means that if their debt level is here, they increase it, then they are safe. So it's like didn't trigger their default in that sense.
Yeah.
So what I think in this scenario here is that if coming to US may default on all this upcoming debt, I don't think it's an issue. I think last time a lot of times they can continue to increase the US debt ceiling and higher. And also we understand that I think during Trump period, when they are hitting the limits, they can actually stop down the government to make sure that they don't spend money so that to repay the debt. And they reopen the
They did that?
Yes. So what I'm thinking here is that throughout this period of time, that is not really a matter for US because they always can print money. All this can actually sort of like going out. I mean, going through a loophole to solve
They can kind of save themselves.
Yeah. So to me, that is not really a main impact to the stock market. Yeah.
Okay. Next question from Loui Low. Which ETF should I be looking at for tech stocks like Apple, Microsoft, Google, and Tesla? I got that.
So I guess in this, because I think the ETF that you're looking for could be a tech-related ETF because it comprises of Apple, Microsoft, Google, and Tesla. But again, if you're looking into buying single individual ETF for leverage purposes, you can always choose the issuer of direction. they will provide you, let's see whether I can find it here. APPU. I'm not too sure I can find it or not. Let me check. Yep, let's say Tesla. Okay, so let's say Tesla. This is US direction. It's one of the issuer that issues this ETF on Tesla.
Okay.
So TSLL, I think, is a long ETF, if I'm not mistaken.
A long-term one?
No. It's a long. Long means it's up. Long means up.
Okay.
Yeah, if I'm mistaken. Let me check. Can we check that?
How do you know?
100%. Yeah. Wait. Okay. Mistaken. Let's check the bear one. Okay, bear. ESLA. Bear daily ETF. So let's see. Bear means, I think that one is long, means TSL, Tesla. The last alphabet L is for long. Long means you are speculating that the counter will go up.
Okay.
Yeah. So this one is straight away tell you that it is Tesla Bear daily ETF. So which means that they are speculating that Tesla will go down.
Oh.
Yeah. So it is bear. Can you see that bear? Bull means go up. Bear means go down. Okay. So, and long means goes up. Short means
down.
Yes. Good. Yeah. So that is the differentiation of things. Okay.
Okay, interesting.
Yeah. Okay. Let's see this.
Why is this in the green? Why is it doing
Yeah. Okay. Oh, when this is going up means it is the Tesla underlying share is going down. So which means that you can see that.
Oh,
yes.
Okay,
So
I understand.
Tesla Bear Daily ETF, if you go into profile and overview, what you see here is that the fund seeks to magnify the inverse negative 100% daily performance.
Okay.
So which means that this is speculating that if this Tesla is going down,
This
this
one goes up.
Yes, TSLQ goes up. Yeah, so I think if you want to find all these individual ETF, which has the leverage or inverse component in it, these are how you can find it. Okay?
Why do they do that?
Because in the market, you can always speculate up or speculate down. But if you're only speculating up, there is no fun for the shorties. They call it shorties, right? So, yeah, I mean, that is what they call shorties. Okay? I don't know what is long. Long gist? I don't know. No, so again, so if you can only speculate up, but you cannot speculate down, what is the fun of it? So that's why I think investors is getting more demanding in a way that, let me have some fun during the down market. And that's why the issuers or even the people will try to put in some interesting ideas to come out with all these great instrument to trade with.
Does Tesla make money off of this?
No. Okay, so this one is being issued by AXS Investment.
So they make money off of it.
They can make a little bit money out of it by the spread or even the. I mean, they can have some expense. They have some headcounts to cover, and this is something that this issuer issued out so that they can because when they are managing Tesla stock itself, there could be an opportunity of arbitrage. Again, this is a very big topic to talk about, but I don't want to bore you with the technical terms here. Arbitrage. So which means that out of this trading of the underlying shares and also this Tesla itself, there could be some spread. They can make some money out of it.
Okay.
So just that this layman term. Okay, so basically they have you can have opportunity to look into a single individual ETF, or if you're looking into Apple, Microsoft, Google, and Tesla, you can always look into Nasdaq, or you can look into Nasdaq, which means tracking Nasdaq is QQQ. So let's see, QQQ is actually tracking the Nasdaq, and this is also so this will be tracking Nasdaq, and Nasdaq is more related to technology stocks. So if you are buying to QQQ, you can expose to all these counters, all these technology counters. Yeah.
Okay.
Okay.
Thing.
Yes.
Bit confusing. Why so
Yeah.
weird?
So if you want to buy long, you can call it bull ETF. If you want to buy the short, you are speculating that
Bear.
you can buy into a bear ETF. Yeah.
Okay.
Yep.
Here's a question from Miracle. New variant of COVID Arcturus is starting its new waves on some countries. Would it be the black swan in the coming months which will give some impact on tourism and flight industry? Even worse, the worldwide supply chain again. What is your point of view in this issue?
Okay, I think
That's a good question.
yeah, but again, if I can really predict a black swan event, I mean I wouldn't be sitting here because black swan is out of surprise, and during COVID that is considered as a black swan event. And if we are thinking that the new variant will be a black swan event, it is not, because you already know what the variance is going to affect us. Yes. And if we know the impact of it, then it is not a black swan event. So what I'm trying to say here is that if we are already living or going through with COVID-19, and with or without these new waves, I don't think it will impact, because I've checked the COVID-19 cases throughout the world. It has been flat, although there are a lot more of these waves coming on, new variants, but I don't think it will contribute a high impact.
And it won't spike up.
And the best out of it is, normally when you got a flu or whatever it is, you wouldn't go and test. So no test, no case, no COVID. So basically what I'm trying to say is that you wouldn't know whether this is COVID new waves or not, because what I'm thinking here is that if this is already sort of like a new normal, like a new normal flu to many of the people that has jabbed the vaccine, I think this is not a very strong argument to say that there is a black swan event, all this tourism or supply chain will be affected. I don't think it will happen, because as long as the variant is somewhat being protected or being mitigated by the vaccine, then we are quite safe. So as long as no death, piling up, then
we're okay.
Yeah, we are okay. Yeah. So I think that's
good for now. Okay. Let's take a break from questions.
Liming said about the PIDM, per banana insurance deposit Malaysia. Thank you so much. Yeah.
But that's what it stands for.
Yes.
In my head, I'm thinking PRDM. Police Diraja.
Oh no, that's PDR.
My bad. Okay. Let's go into our mini game now. So we're just gonna have 3 questions. And for those who haven't already downloaded the app, just scan the QR code over here next to his head and create your account, register. It only takes 5 minutes, and you can win the 20 ringgit trading voucher that will be credited into your account. So it is important that you have the app and you have an account for us to credit the trading voucher into. Okay, so let's go into the questions, shall we? Okay, the first question. Louis, you want to read it?
Who is the CEO of Alphabet?
Yes. Who is the CEO of Alphabet?
Alphabet is Google. So just Google it.
That sounds like a dad joke. My God.
Oh my goodness. No lah. Come on.
Okay, I like that joke. My dad makes a lot of dad jokes. Okay, any answers?
Whoa,
there we go.
Fast.
Very quick. Sundar Pichai.
Yes. Okay.
I know that y'all are correct. I know the answer to this.
Yes.
Okay.
So.
Let's move on to the next question. Okay. So this is a multiple choice question. The following instruments are available to trade on M Plus Global except A. CBBC, B. Hong Kong stocks, C. ETFs, and D. Bitcoin.
Wow, that's fast.
What is CBBC?
Callable bull bear contracts.
Which is?
Okay, it's another derivative which we'll cover in another round, but I think it's very interesting for people that likes to speculate, okay? I cannot say the gamble word here, but yeah. But like to speculate.
It's not the same thing. Okay.
Yeah. No, it's not. It's more political correct.
Okay. So the answer is D. Those who got it right.
Yes.
Y'all smart. Y'all can just check the app also lah. Okay, next question. Go ahead.
Which of the following stocks have the largest market cap? Wow.
So we have
A. Apple, B. Amazon, C. Nvidia, and D. Meta.
I think everybody knows lah. Apple. Everybody owns at least one Apple product nowadays.
Yeah, that's correct.
All right. Well, that is all the questions we have for you today. If you have any other questions for Loui, you can put it in the chat. I will be asking him a question of my own.
Yep.
Okay. So, Warren Buffett is one of the major shareholders of Apple. What is your take on his investing strategy, and why do you think Apple is one of his favorites?
Okay, there are many ways to look at Apple. For me, I like Apple as well. I think I'm an Apple fan to start off with. Even do you know that when we don't have the first iPhone in Malaysia, how did I get an iPhone in?
Singapore.
No, because those time not even Singapore has that. I think during that, I think it's 2G phone. They call it the iPhone 2G.
iPhone 2G.
Where the back is golden color and the down is black color. Okay, so that time I'm so Apple fan that I, bought it from a second-hand. Bought a second-hand from my friend in Canada.
Wow.
So that they have to import. I mean, they have to deliver all the way from Canada to Malaysia.
Oh my god.
So what I'm thinking is that I want to be having the wow factor. So that is the first thing, because I think no one has it. So
you want to be the first person who has it.
So during the time, I think maybe 10 or 15 years back, that was a time whereby they started with the 2G, and I find that their product is user friendly, first of all. Then secondly is that the security issue and things like that. So I always sell that. Why I want to use Apple is that is the thing. And thirdly is about the ecosystem. You can Apple, iMac, whatever, you can connect all together. You can transfer all the files easily, maneuver around, AirDrop, from iPhone to iPhone. So the ecosystem is mature enough for people to use it. And at a very ease manner, they can translate to many of different things. So for instance, even at my home, you can also build the Apple ecosystem of smart home products.
Right.
By using Apple HomePod, you can actually...
the HomePod is so cool.
Yeah, you just say, hey Siri, I want to turn on the car porch light, I want to turn on the toilet light. Those are the things that I think the ecosystem makes the whole sense about it.
What?
No, not yet. Okay, but I'm trying to say that that is the ultimate goal of a smart home. I mean, if they can do that, they are one of the best. Low in terms of lagging, in terms of the lag delay effect, because when you use other products, there is a delay effect. So once you tell the, let's say, the assistant to say that hey, can you open this light up, you need to wait at least 1 second to for the light bulb to turn on. But I think Apple product has less delay, the least delay. So once you have you mentioned that what is the action that you want to do, it will straight away turn on the light. So that is the ultimate goal of the smart home products. But again, coming back to Apple, Warren Buffett's investing strategy. I think he looks at first of all, I think stickiness, and he looks at also the cash flow, which means that as long as the things is selling very fluidly, as long as the products are still in demand by the Apple fans, I think that is where there is a lot of recurring income. And secondly, I think they look at the services services segment, so such as App Store, iTunes, all those things contribute to the revenue as well. So those are the very sticky things that you cannot remove from Apple. If you want to list your Apple product or Apple, one of the apps on App Store, you need to go through all these processes,
Right.
security check and whatever not, and only you can lease. After you lease, you will be charged. If you're a developer, you'll be charged a fee by Apple. So
Yeah.
Apple will definitely get ultimate
So this is how they just keep on making money.
Yes. And if Apple products is being used by so many, more than maybe 2 billion of people population in the world, therefore there is 2 billion people on the App Store that wants to download a product, an app. That is the strong niche of strong selling point for Apple. And besides, all these products are consumer electronics. By 2 years, 3 years, it will obsolete. So you need to have the recurring to buy into new refresh products, and that is where Apple makes the most.
Yeah.
So I think myself, I already bought like maybe 3 to 4 throughout this period of time. But although it has been coming out for 15 products, I still continue to refresh on Apple products, and they are coming out with the watches.
Yeah.
They are coming out with potentially the VR headsets and things like that.
That's cool.
So they bought into I think Beats.
Yeah.
Then they produce their own headsets.
Yeah.
So it's like everything is like so cool, and everything is like so
On trend.
Yeah, on trend, and also people. Nowadays people will need all these gadgets, and therefore I think all this contribute to the factor that Warren Buffett buying into Apple, and I think Warren Buffett doesn't like technology stocks early on.
Oh.
But I think
He changed his mind with Apple.
yeah, he changed his mind. Perhaps he can see that it has becoming maybe more consumer kind of things.
Maybe he's an Apple user.
Maybe, I'm not too sure. But again, I think the idea behind it is because of the ecosystem of the Apple products are so matured in a way that you can connect every of the things together. That contributes to why I think I like it, and most of the people buying into Apple products will be that. Again, it's also, you can say it is a cult that,
It is.
and also, it's like Tesla. If you like Elon Musk, you like Elon Musk. If you don't like. So is that? I think that is the case. And once you are in that kind of environment, it is hard for you to come out.
Yeah, I feel with Apple, right? A lot of us as consumers, we love Apple so much. We're so loyal to Apple, right? Even if that was like a new product, a new brand that came out that was similar to Apple, similar but not exactly Apple, similar design, similar this, similar that, we still wouldn't switch because we're so loyal to Apple, and that just gives it the power over everything,
Yes. So I think that is the one of the very unique selling point that I think people doesn't have. I think Apple has that, and it is very durable. And it has very, it has for me, I use PC and also Mac, but I find Mac has more durable kind of lifespan, and also they don't go to blue screen so much.
Yeah.
It doesn't go crashes so much. I think I like the Mac. Yeah.
I definitely agree with that.
No.
Okay. That brings us to the end of our Q&A. Now we're gonna be announcing the winners of our mini game for today. So like I said before, if you haven't downloaded the app, just scan the QR code and register your account, and only takes 5 minutes, okay, so that we can credit the 20 ringgit trading vouchers into your account. All right, so the first winner of tonight is, congratulations to Louming. You have won 20 ringgit in trading vouchers. Woohoo! Okay, Louis, the second
one?
winner?
Second winner is Chia Wan Chow.
Congratulations. You also the 20 ringgit trading voucher. And our last winner for tonight, congratulations, Miracle Lau. You also win the 20 ringgit trading vouchers. So don't forget to fill in your details in the Google form, and we will credit the transfer the credits to you. Yes.
Okay. Any other questions from the comment section?
Just want to say thank you to everyone who was interacting and participating tonight, and for tuning in as well. We really appreciate your support, and we always look forward to spending the night with you.
Yep.
So yeah, the Google form has just been put into the chat below. Please fill in your details.
Thanks for that.
Okay. Now, yeah, so I hope this has been a really productive session for all of you. I have learned a few more things tonight. So for anyone who missed out today, don't worry, you can just rewatch the live on our social pages. Don't forget to follow us on Instagram, Facebook, YouTube, and TikTok at M+Online. Okay,
So thank you so much, everyone.
I'm Caitlin,
And I'm Louis.
and good night.